The Mortgage Time Real Estate brought to you by our friends at Geneva Financial. RSR Money.
When you're ready for that next home loan,
Geneva's
got
the programs and the products. You just need to make the call. 800-306-1990.
About homeowners insurance.
800-306-1990.
That's a biggie here in Southern
California.
Homeowners insurance is a must-have.
They provide the most comprehensive, accurate, timely,
and interactive analysis of pricing.
And while you never want to think about worst-case
calculated
scenarios,
from
the
actual
right
law
coverage
coverage
is
is
basically
your safety
35% of
If
all
something
mortgage
goes wrong,
transactions
here's how it helps you.
nationwide.
They do
Covers
not tell us
repairs
points
and
paid,
rebuilding
points
costs. Your
received,
home
or
is
the
damaged by
APR.
fire,
They only tell
storms,
us
or
the number
other covered events.
you put into your mortgage
Your policy helps
calculator
pay for repairs
find
or
out what your
even
principal and
a
interest
full
payment will
rebuild.
be.
Protects your belongings.
Don't have a
Many
mortgage
policies
calculator? Not
can
a
also
problem.
cover personal
Get
items
our
like
mobile
furniture,
app. It's
electronics,
free.
and clothing.
rsrlinks.com
If they're stolen or
/mobile app.
damaged, provides liability coverage. If someone gets injured on your property. So let's take a look at what
Homeowners insurance can help cover medical bills or legal
expenses.
expenses.
In the simplest
Jumbo
sense,
30-year fix
it gives you
down
peace of mind knowing you have protection against unexpected
FHA
events.
30-year fix
Helps you worry less. And
That
with
was
such
up.
a big purchase.
VA
Having that
30-year fixed
reassurance
loan
is a
on the
big
market.
deal.
For
And while your
our
first
veterans,
insurance
no
payment
down
will be
payment
wrapped
if you
into your closing
qualify.
costs, you want this to be a part of your
6.22%.
of your budget.
USDA
Beyond closing
30-year
day
fix.
two. That's because it's
down.
a recurring expense.
That's for the rural areas.
You'll have
Generally,
once
no down
you
payment on
get
that
the
one.
keys to your home.
6.37.
Here's what you need to know to help your
if you
budget.
want our thoughts on the
This
market,
important
each and every
part
business
of
day
homeownership
morning, as
today.
early as the data
Costs and
allows,
claims are rising.
you
in
can
recent
actually
years.
get that.
Insurance
All you
costs
have
have
to
been
do
climbing
is go
according to
to
insurance.com.
rsrlinks.com.
There are 4 big reasons behind the jump in premiums.
More severe weather events and wildfires.
Let's see what the markets are doing today.
10-year
That's a
Treasury
real
is
big
up 2
surprise,
basis
isn't
points.
it?
Not
Surprise,
much.
surprise, surprise.
4.31.
Insurance
Mortgage
companies are
backed
pulling out of
security,
high-risk
that's
areas,
down
reducing
6
options
basis
for homeowners.
points.
Remember, when the
Some
bond
states
goes
pass
down, the rate goes
increases.
up. Haven't
6
kept up with
basis
the rise in
points
claims and the
means
cost
it's
of
not
rebuilding
moving
a whole heck of a lot
homes
because the
has
bond
gone up
is
due to
waiting
higher
material and
to
labor
see
costs.
what the Federal Reserve
Basically,
does. So they
disasters are happening more often, repair costs more.
And
Again,
insurers
11
have to
o'clock
adjust
Pacific
their rates
time. Also
to keep
included
up.
in this statement,
Data from
will be their
ICE
summary
Mortgage
of
Technology helps
economic
paint the
projections,
picture
SEP,
of how the average
gets released
yearly
every
premium is
other
climbing
meeting
over the
The
last
SEP
decade.
shows
If you're
where
watching
the
us on
19 Fed members project
RonCigaRadio.tv, any
things
of our socials,
like unemployment rate,
or the
GDP,
ABC,
core
News and
PCE,
Talk AM
personal
1490 and
consumption
FM
expenditure,
98.1
video
and the
feeds.
Fed funds rate will
You're
be
seeing
this
a
year.
chart of the average
Looking at the
homeowner's insurance
statement
premium of the summary of economic projections at
14%.
SEP from December 18th.
Remember, that's a national number.
Not today, December 18th.
California,
We're gonna talk
unfortunately,
about
we're projecting
we're
unemployment
higher
at
than
4.3. What you can do about it,
GDP
homeowners
at
insurance
2.1,
is
core
a must.
PCE
Protect
at
your home
2.5, and the Fed
and your
funds rate,
investment, but with
2
rising
cuts.
costs, you'll want to do your homework.
That has a lot to
The balance
contemplate
of
since
best
they're
coverage
meeting
you
as
can
we
get
have
at the
received
best
some
possible
softer
price.
economic data.
Homeowners insurance rates
Consumer
vary
spending
widely
figures
based
were
on
negative.
location,
The
provider, and
unemployment
coverage.
rates unexpectedly
Shop around and compare
rose
quotes
to
before settling on a
4.1%.
policy.
There
And
has
don't
been
forget to
cooler
ask
inflation
about
data. Consumer
discounts.
credit has been
Things
worrisome,
like security systems
and
and bundling with
GDP
auto
estimates
insurance
have been
could help
slashed.
lower your insurance
closer
costs.
to the Atlanta
Bottom line,
Fed GDP now
when you're planning to buy a
forecast.
home, it's important to
They're
look
projecting
beyond
a negative
just your mortgage payment.
1.8%.
You'll also want to budget for your homeowner's
Negative
insurance policy. It gives you a lot of
1.8%
protection
GDP
against
for the first
unexpected.
against
Yeah,
the
that's
unexpected. And while it's true,
But
these costs
that
are
doesn't
rising,
contemplate the
there are
foreign
things
trade
you
and
can do
gold,
to try to get the
which is
best
estimated to
possible
account
price.
for plus 2%.
What's your budget? Biggest
Even with that
concern
GDP
when it
would
comes
be
to
flat
budgeting for home ownership?
and would concern the Fed as there would be no growth.
1990.
Something else we have been calling for is an announcement that the Fed will
Ask
stop
your agent
their balance sheet runoff. We spoke about
about
that
the
yesterday. We
concept
feel
of a
good
higher
chance that they at
deductible
least mention it and potentially
using
lay
a
out
Roth IRA.
the plan for when they're going to
No
end
one
the
talks
runoff.
about
Once
that,
they
but we do on Ron
the
Siegel
Fed will
Radio
be
because I am a
reinvesting
certified
roughly
liability
$40
advisor.
billion
And I help
per
families
month
build wealth through
back into
strategic
treasuries,
debt management,
which would absorb some
That's
of
the
the
real-time
supply
real
and be a
estate
good
segment
thing for the bond
brought to you
market.
by rsrmoney.com.
Remember, on Fed days, there's a lot of
RSRmoney.
volatility and oftentimes a
.com.
knee-jerk reaction. So we don't want to remember the Fed, the markets always overreact. Always overreact. We've told you that for many, many years. So if the markets overreact in a favorable manner, act quickly. If the markets react unfavorably, ignore it because it'll turn around a little bit. So that's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.